Welcome back, crew. Bitcoin dumps. Ethereum does the Ethereum slide. Altcoins are bleeding. Not because crypto is dead. The move was triggered by geopolitics, leverage, and fear, not fundamentals. The US, Israel strike Iran. Markets go risk off. Leverage gets nuked again. And suddenly everyone's panicking, and I think they're panicking at the wrong time. But today I'm going to show you exactly what moved the market, why the sell-off itself was mechanical, not structural. However, it could lead into a structural push, and where the smart money is actually looking to position after this flush, because volatility doesn't destroy opportunity, folks. It actually creates opportunity. So welcome back, crypto crew. It is your boy Tom here, bringing you the what? The hottest in Bitcoin and crypto exchange. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day. Because we're crypto maniacs. And the information that we give you is like an adrenaline shot with steroids. And you always leave with a triple shot cappuccino. All right, listen, on February 8th, we told you that we had a standing order that was already in the marketplace. Let me take you over to the chart so I could show you. Here is the Alchemist Frank's chart, where we said that we had a range high around 71.5, 72,000. We actually traded this short. We scooped some money on the short, and guess what? Guess what? We had a standing order to buy Bitcoin at 63,500, and we are in the trade right now. Okay, this exact structure. We traded it short first. Now we're long. It was not a guess. It was not a motion. It was planned execution. We are in. Let me take you over to BTCC, our broker of choice. Always low fees. Always fast execution. Always exceptional fills. Right now, the trade is making 3,579.91. We were up as high as like 9,000 on the trade. But hey, we're not panicking. All right, we told you about this trade. You got to get into our pro group. We are trying to capture over $180,000 on this move. Now, later in the video, I'll take you step by step exactly how we got in, why we got in. And later, also, I'll try to highlight some projects you could get involved with. All right. So right now, let's move on over into what's happening in Bitcoin itself and why the macro shock of war moved crypto. We know Bitcoin is still teetering on the all-time high, or are we going into a full bear market? It's interesting that the 60,000 has held up so far, but here's the truth, right? Crypto didn't crash because of these charts. It reacted because crypto trades 24/7, and nothing else does at this point. But things are coming. Things are coming. And why it's important is because we really need to see what's going to happen in the oil market on Monday morning. All right, that's going to be important to see how oil reacts to this. We got to keep our eye on oil. But right now, when the U.S. and Israel launched the strike on Iran, stocks were closed, bonds were closed, oil market was closed, FX was closed. Crypto was the only liquid market open. So what happens? Risk managers hit the sell button. Okay, funds, deleverage. Traders flatten exposure. That's not a verdict on Bitcoin. It's basically just a liquidity event. They need to, get out and like reassess. Now, if Bitcoin takes off on them, and they say there's no big shock to the oil market, or the FX markets open up calmly, which I think they will. I don't think the FX market's really going to be affected by this. I mean, we've had a couple of weeks to really digest this. We knew that something was going to happen. I mean, you just don't send carrier groups over there and continue negotiations where you keep saying it's not enough, it's not enough, it's not enough. Well, they're going to strike, right? So that they strike. So what happens now, right? So we got a liquidity event. This is what professionals understand, and sometimes, retail will completely misread. Now, that's why I say get into our pro group. We'll help you read this market, all right? Right now, really nothing has changed. If we really look at Bitcoin, really nothing has changed. we're still sitting, okay, in between, let's say, let's go to this low right here, 62.5 and really 72 right now. So Bitcoin needs to recover over this all important point of 65,113. Now we're flirting with it right now. Bitcoin's sitting at 65,065. Okay, so we need to close above that. Remember, this is a 4-hour chart, but a close above on 4 hours would be good to actually show, okay, a little bit of stability. Market's kind of absorbing what's happening right now. We quickly dropped below 64. We tagged the low 63s. You know, I can't say that this support at 65 is really failed yet. Now, if I get a rejection from here and we get the takeout at this bottom, then I'll say that this 65,001 has failed. I can't say it right now because this was just basically a leverage problem that happened. And once everybody saw that, oh, war, right? So they just puked positions, right? So now there's hundreds of millions in leveraged longs that were like wiped out. Okay, forced selling creates waterfall candles, as you can see right here. Click, 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 and now we're starting to get to recovery. So Bitcoin is still inside its broader range. Prior consolidation zones are still acting as reaction areas. So right down in here, we're getting a reaction. We hadn't even come down to this deep low yet. We came down, we bounced off of it. Now this is a reactionary zone right now at 65. If we can clear it, then the next level up top like 70, or actually I would come down to this, really 66, 68. Right now will be another reactionary zone. So this really is what we could be having a potential reset right now, but other charts are pointing to deeper correction. Now we've been talking about that. Yesterday I said our conspiracy theory, right? That the big boys. Now I saw a comment, all right, that BlackRock doesn't care about the price of Bitcoin. You could be damn sure that if they told their clients to buy Bitcoin and it falls out of bed, what do you think is going to happen to BlackRock? They're going to have an exodus of clients, and those clients are going to go somewhere else. Where? Fidelity, State Street. They're going to leave. That's what happens. So they are very concerned with calling the timing of Bitcoin. Now, I'm not saying that they went and called their clients and said, you need to buy Bitcoin. I'm not saying that. I'm saying that they do care about their trade call off of when their clients should get involved in any type of marketplace, whether it be currencies, real estate, stocks, bonds, and of course, crypto. They are concerned. They don't want to look like, oh, I called the wrong price, because customers are not kind, especially those customers. Those customers expect rates of return. They don't expect excuses. So they are concerned with it. Now, I'm going to show you a chart that basically is a fractal warning, okay? And the chart really doesn't get enough attention, but we're starting to see the same fractals that we've seen before, which I'm not too happy with, but, hey, we've planned for this. We're thinking we could dip down to 50,000 before we get a real high movement up. I don't even really think we're going to get that low, but you never know. So we're seeing it start to repeat the same fractal. Like we're thinking this is a bull trap setup, okay? And it's not this. It's not. We didn't think that the first breakout upward that we just saw. I mean, I know it was only a touch of 70. It needed to get through 73, and all importantly, it's got to clear 78. But really, what we're thinking was that the short-term movement was a trap to basically catch longs, and that's how the market really engineers confidence in itself. In other words, I'm talking about the big players. They engineer the confidence in themselves. So price breaks out, narrative turns bullish. Everyone thinks that 60,000 is the bottom. And that's when the real move begins. Because once the consensus forms, market's going to do the opposite. So they engineer confidence in the movement upward, okay, in themselves in order to actually turn it down and mess with the retail or mess with the smaller players. Okay, so again, once everyone agrees that 60,000, like, okay, 60,000's in, that's a good round number, that's a good psychological level, it could be a potential bottom, then the market's actually going to do the opposite. Okay, If this fractal plays out, the next leg isn't a continuation upward, it's a dump to a new low. Now, where is that low? Could be 58,000, 55,000, 53,000, 54,000. As long as we don't go lower than 48,000. Now, I don't think that we'll go much lower than say 56.5, 57, something like that. But I'm not in this game to predict prices. I'm really bad at predicting prices. Okay, I think that if I was going to be, I'm not a fortune teller. Okay, so I can't predict any type of price. The only thing I can predict is a movement off of a price. That's it. So really, I'm not in the game of actually making any type of prediction, because once you start making predictions, you try to find biases to prove those predictions correct. I don't do that as a trader. I watch the market place, and the price tells me everything. Opinions are mere words. Actions are the only truth. Okay? Opinions are mere words. Actions are the only truth. Same thing with markets. Okay? You can have opinion about anything, but price action is the only truth. All right. So, if we do go down, it does not mean that Bitcoin's, breaking up, it's over. Okay? It's really because liquidity needs to be harvested. Markets don't ever reward agreement. They actually punish agreement. It's just, everything you know about a market, it's actually the opposite of what it is in real life. In real life, you don't get punished when everybody's on your side. The market does. People don't punish you for it, especially if it's the correct, right opinion. But in a market, if everybody thinks one way, the market goes the other way. All right. So if we look at this chart again, I'm going to show you a different chart that looks really uncomfortably familiar. In 2021, if you look at it and you look at 2025, 2026, in 2021, we saw the same sequence: distribution, a breakdown, then capitulation. If we look at 2025, the same structure is starting to form. It's where traders get trapped. We're staying nimble. You say, guys, you're long. Like, if you think you're dumping down, why are you long? Well, for one, we don't know if it's exactly is truly going to break down, and how deep the breakdown will be. So I suggest, if you're curious about that, or the mentality behind it, I suggest that you read Reminiscences of a Stock Operator, the life based on Jesse Livermore, where they talk up to Old Turkey. Old Turkey was a trader watching the ticker tape, and everyone would come to Old Turkey and say, "Hey, we're thinking that we're going to get a reaction down from this top, and it's actually going to come, lower. You should sell your position and look to buy the dip." And Old Turkey says, "It is a bull market, And they say, "Yeah, it's a bull market, but you could capitalize on this dip down." Well, then, sir, I would lose my position, and if I'm wrong, I'd have to pay much higher to get it. Now, I'm not saying we're in a straight up bull market. It's just a story. I suggest that you go and if you could read it, because that's the mentality we have. We're in, and we could dollar cost average on the way down. We're making plenty of money due to our day trades. We've almost doubled our account in 3 months. Don't believe me? Go look at our profit dashboard. Get in the free group. Go check out the profit dashboard. Every trade is there that was taken, and all the profits are there. Real money. It's all there for you to look. So, in other words, what we're saying is that we're not really worried about the push down. We don't know. Of course, we'd be concerned with it if it goes to our stop. Yeah, we just lost 60 grand. Okay, but guess what? You don't get paid for certainty. We get paid for taking risk, right? So anyway, we got the same structure that's starting to form, and this is where the traders get trapped. Relief rallies feel bullish on the surface, but they're not trend reversals. They're really exit liquidity. So that gives late buyers hope, but smart money really looks for a clean door out at that point in order to actually rebuy. So if this sport gives way, we got really, that's like 53,000 that becomes a magnet. Not because it's magic, but because markets seek like liquidity. Markets don't, They don't fall the way they rise. They rise very slowly, but they fall very quickly. That's why I always like being on the short side of things most of the time. So that's why risk management matters more here than actual prediction. And I said, I'm not trying to predict this marketplace. I never try to predict. I just try to follow, find out what the market's doing after it does something. All right. Now, we know that Bitcoin itself is full of brutal corrections, and we're in one of them right now. If we look in the history, we got 84% correction, 55, 77, 33. Now the bears are saying that we're getting a 70% correction. Okay. So fear is completely understandable, but surface leverage percentage drops don't define the cycle themselves. Structure does. So if we zoom out, we know that institutions are building exposure. They're not disappearing. And I know, I hear it. What are you talking about? We're down. I told you yesterday, did you really expect banks, institutions, all these big hedge funds to come and just say, hey guys, you did a great job holding. Now we're going to reward you and drive you back up to like 150,000? No. Okay. You got to keep in mind that regulatory fireworks are still being finalized. They're not being weaponized anymore. Long-term supply continues to tighten. Deep drawdowns aren't a flaw in Bitcoin. They're a feature. That's what they are. They're not a flaw. They're a feature into the monetization curve. Volatility like this transfers coins from emotional holders to capital with conviction, like ourselves. Okay, we're long. We're saying we could dip lower. Capital with conviction. Every major expansion phase in Bitcoin's history was preceded by discomfort, doubt, and people puking positions. Bull markets, they're never born in euphoria, folks. They're born in exhaustion. And look at how this marketplace is trying to exhaust us. It is trying. I mean, I'm getting pretty tired, but I've been around long enough to understand that it's just part of the game. But the real question isn't whether volatility exists. It's this. It's who's going to control supply when all of this ends. That's the question you got to ask yourself. Who is going to control the supply when all of this ends? Will you still have something? Or you already given up on to the next shiny object? That's up to you. I don't know where you're at. I don't know where you bought. But really, you should not be over leveraged. You'll be able to sustain this. Even if it's 3 years later, this thing is going much higher. All right. But now I want to show you something. The MACD on Bitcoin. We got to pay attention to it. But I'm going to tell you a little secret. But before I get into the MACD, I want to just show you this one other chart. Okay. This is the chart. We need to break 77 or 78,000 to shake off the bearishness. That's the price that needs to break. Before I get into the MACD, just write that's the price. The longer we stay below this, the more chance we got to dump and dump deeply towards 50,000. Okay, now let's check out the MACD. Now, historically, when the MACD flips from red to light pink, we're starting to see a reprieve. Okay, we're roughly halfway through. Okay, what we consider the short-term bear market process right now. Red to pink downtrend is losing strength. It doesn't mean instant pump. It means momentum is shifting. Patience is required. So far, we are still red. But I'm going to tell you, here's the trick. Price will precede this. Price will be the movement that occurs first to flip this. So pay attention to the price. The price above 78,000 will actually flip this. That's the price point. All right, let's move on over to Ethereum. Oh, let me tell you, let's get into Ethereum. Another slide, the Ethereum slide. You heard the electric slide? This is the Ethereum slide. Now, really, as far as things are concerned, Ethereum did not dip as much as actually Bitcoin didn't really even dip that much. It's in the range. The same thing's happening with Ethereum. It fell into the mid 1800s. Okay, the main point that we had was at 1740. We didn't even go anywhere near it as of yet. It's held above, so far it's held above, what I would consider a major psychological zone, which is the 1750. All right. It's outperformed most mid cap alts recently. It's still trading as a better leveraged version of actually Bitcoin. So Ethereum weakness here is really sympathetic selling. It's the people that missed the sale on Bitcoin that are actually trying to sell Ethereum late, in my opinion. Okay. So you need to watch Ethereum and Bitcoin to cross closely. All right. Now, if we can get above 1900 and we can get above the 2050, man, that's going to show some real good strength. But Ethereum right now is still tracking the 2021 fractal. And this chart's actually whispering that we have a potential to drop down deeper, perhaps even to 1600. Okay, so we're not at the bottom zone yet. Key support right now, if I'm looking at this chart, weekly is 1600. Below that is 1200. So if history rhymes, the final washout may still be ahead. So capitulation, rarely feels orderly. So you gotta, just pay attention. I don't think that we're gonna get down there, but you never know. Like I said, I'm not really in the price prediction game. I watch markets. I watch the price action itself because that's the only truth. All right, let's look at Bitcoin dominance. Well, actually, before we get into Bitcoin dominance, let me show you how you can join the pro group. Link is in the description of every one of our videos. You click this link, you'll be taken over to our pro Telegram trading community. Wells. Anybody that's trading 10, 20, 30, 50, $100 million, $2 million, you need to get into our well group. Okay? Money like that needs to actually have some structure. We'll help you. It's a free group. All right? Get in there. You can get in there through the free pro group. Now, for short-term traders like myself, we drop insane alpha trading opportunities every day. All you guys that are over there, noisemakers, all the noisemakers, once you come on over into our trading tournament, you click this link, you'll be taken over to this website right here where you can actually sign up and trade. Show us your stuff. We got some decent prizes, but really this is not the issue. Okay, what you want is access to Maryland Traders Whale Group. You want opportunities for OTC deals. You want access to investor accounts. That's what you want. That's what you always said you wanted, right? Get in there. Show your stuff. All right, let's get on back over to Bitcoin dominance. Bitcoin dominance is still around 58% and creeping higher. So we know that all the money's sitting in Bitcoin right now. It's sucking up all the energy right now because everybody's a little bit nervous, and this is like the king of crypto, right? So capital moves out of riskier alts, tells you one thing: this is still a risk control environment. Now, historically, right, we know that Bitcoin dominance peaks after fear events, and that's when we can get some rotations, right? But not at the top, only after a flush. So altcoins right now, we know we're near an altcoin season. Believe me, you won't need me to tell you that we are in an altcoin season because some select coins are going to move. So let's go on over to good old XRP. For the XRP Army, I mapped out these prices for you. And as you can see, good old Tom's price point at $1.27, 26.98. Look how it held. Okay, I told you if we broke 136, we were heading down to $1.30 psychological. If we broke $1.30, we'd be going to 127. Don't believe me? Go watch the videos. Okay, now we're getting a little bit of a reprieve off of that. We got to get through $1.36 and $1.40. But I expect this is a weekend. We're probably just going to consolidate. The price point underneath here, that's most important, is $1.20. We actually have two. You got the $1.20, and then you got the 118 gatekeeper. That one, if that one breaks, we're going to revisit the 110, 108. Okay, potentially even down to like $1. Now, I'm not saying it's going to happen. I'm just giving you the technical levels. So your $1.18 is your most important support point. Now, if we could recover from this madness and get above $1.45, you're looking pretty good to attack $1.68, $1.70. But until then, we're going to just be in a quagmire of chop. That's it. All right. I want you to come over and check out Canton. With all the chop that's going on, Canton's holding up very, very well. Okay. Didn't even come down to, actually, it did touch the 1558 level right here, 1561. Actually rebounded off it, hit the 17, and it's holding up pretty well. It needs to get over 1730 to potentially attack the 19. Okay, and of course there's going to be in between there. There's going to be like 18 and 18 18 cents itself. All right, so I just want to be really clear. Okay, this is fear. It's not despair in the marketplace. Capitulation. Sometimes fear is hopeless. It still feels emotional to me. All right, it doesn't feel like the market stabilized. And of course, the more reports we get out of Iran and the more counterattacks, it's going to feel a lot worse. So make sure that you come on over to X and follow us on X. Poor Merlin woke up with a hangover, heard a loud bang, and now he's seeing the headlines of the tensions. He's very, very close to the action. If you know where Dubai is, right, it's very close to the heat that's happening over right now in Iran. So anyway, Merlin, stay safe, keep your head low, go out for another beer, man. What the heck? Might as well just go out for another beer. All right. So as it stands right now, this move was geopolitical, liquidity driven, leverage based, not structural. So we got to make sure we watch Bitcoin hold key support, Ethereum stabilize, Bitcoin dominance start stalling or rolling, and funding rates actually resetting. So volatility is not the enemy, folks. Unprepared traders are. So make sure you get into our pro group. So what do you got to do? Well, you got to join the pro group. What else you got to do? Well, you got to trade with your head not over it. You got to make sure you don't over leverage yourself. You got to do your own research. As you know, I'm a trader just like you. I do not offer any type of financial advice. And as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.